traders, FX Pip Collector here. Today is Tuesday, November 12th, and I'm going to be analyzing the US dollar yen, starting on the monthly, working my way down to the 1 hour time frame for the full top-down analysis. But don't forget to check out my website, fxpipcollector.com, if you would like to get access to my swing trade setups, my daily members-only live streams on Zoom, and my 34-video trading course, all included for only $30 per month. So anyways, on the dollar yen, like I've been saying, we have two options. This is either going to be an ABC, which would be a correction to the last 5 waves up, looking something like this, or potentially this really is the end of a wave 5. Instead of it being an ABC, it would be a 1, 2, 3, 4, 5, which would go down and take out the low of wave 4. Like I've been saying, notice that it's exactly the same type of price action until you get about 2/3 through that third wave, which is why, to me, I don't really care whether it's an ABC or 1, 2, 3. Going down to the weekly time frame. So on the weekly time frame, I think this is an A. I think we're in a wave B. I definitely still don't see any evidence that the wave B is over. I mean, it could drift up to a higher fib level. Wave B sometimes even take out the high of the previous trend. So definitely don't think the wave B is over until you see some nice proof that the wave B is over. Going down to the daily time frame, the trend is definitely still up. Now it totally looks like a 1, 2, 3, 4, 5, and we are at that key level that I've been watching. So if it does go down, if it does break structure, that's what's going to make me believe that it is the end of a wave B. Otherwise, I would continue to look for longs because, like I said, this could go up to the 78% and beyond. So we definitely should be trading with the trend until the trend gives us some proof that the trend is over. Going down to the 4 hour time frame. Now we definitely got impulsive down right here, which looks like a trend, so I would label this as either an A or 1. I would expect this move up to possibly be a correction to this move down, either a wave B or a wave 2. Now the thing is why I wouldn't be going short is because sometimes what you think is a wave B or a wave 2 actually just keeps on trending up. And the trend is up on all the higher time frames. So if the trend is up on all the higher time frames and we think it could be a wave B or a wave 2 and we think it could go down for a C, which would look like this before it turned back up, or a wave 3, which would go down and break structure, the problem is, until we get a trend change on the higher time frames, it actually may be more likely that this just keeps on making higher highs, higher lows, which is why I suggest to continue to look for longs. Going down to the 1 hour time frame, now we are sitting at the 78%, but that only is going to turn me into a seller if I see a nice move down and a break of structure. After the break of structure, I would wait for a pullback, and then I would start looking for shorts after the break of structure and after the pullback is complete. Otherwise, every move we see to the downside, if it doesn't break structure, we should be looking at is nothing more than a possible correction to the last wave up, and we should continue to look for longs at least until we get that break of structure that we're waiting for. So don't forget to join my free Discord channel, which is linked down here in the corner. And as always, thank you and happy trading.